Yeah, of course. So we were just chatting a moment ago because, of course, we have this risk-on rally in the beginning of the year. You were saying you are a long-term bull, or you have had a long-term bullish view, but you're feeling a little cautious. When I hear a posturing change from somebody who's been trading forever, it really, catches my attention. So talk to us about that.
Yeah, I am really an uber bull, and I still think economic conditions are really good here. The ISM manufacturing number that came out last week really put up a red flag for me, because some of the slowdown that we've seen in the Eurozone, China, obviously, that is starting to creep here, it seems like. So I'm a little cautious. Plus, there's so much risk headlines still out there. I love the rally that we've had. I think we're going back down, not necessarily testing the ultimate lows that we've had, but making some probably 3 to 5% down from here.
And you're putting your money where your mouth is.
Absolutely.
Outside of your trade, you're buying VIX calls?
I did about an hour ago. I bought some VIX calls going out 2 weeks from now.
Okay.
So expiring actually 2 weeks from tomorrow on the 23rd. You know what? Not so high up from here. VIX is trading 20 and change. I'm long actually a 22-26 call spread. That's what I bought.
What are the folks back in Chicago saying about the earnings season in terms of the possibility of an Apple, more Apples happening, guidance outlooks being revised down?
Certainly that is front and center in what all the traders that I deal with on a daily basis are concerned about, is that not that we're not going to see good top line, good bottom line, but what that guidance is going to be due to what's happened with the tariff talk. And I think we're going to see a lot of that.
Do you think if it was, say, just an okay earnings season, not great but not terrible, that would be enough to lift markets?
I don't, because we've seen those revisions come down so drastically. I think they really overall net have to be a blowout earnings season and keep those guidance revisions on the downside to a minimum.
It's going to be an interesting month for sure.
Oh, my God.
Yeah, yes. Lots to talk about. Let's now talk about your trade, Constellation.
Yes, earnings tomorrow morning. This stock, much like the rest of the market, really got hammered, down about 40% off its highs. I really like where they're going here in the future, and I think that much of what happened here was overdone just because of general market, not Constellation specific. Earnings tomorrow morning. I'm buying a call spread that goes out to next week, actually. Give it a little bit of time. The 180, 185 call spread. Stock's around 172 right now. Expected move out to next week that the option market's pricing in is about $12 or $13. I can buy that for around $1.20, $1.25. The reward to risk of that is absolutely phenomenal. It's over 3-to-1 reward to risk. We talk about that all the time. I really like to define my risk. This is great reward for me. I really like the upside here.
Love it. And you had a great call on Nike just a few weeks ago, right ahead of earnings. So I love your own ability to handle risk that way in terms of making a big call. Scott Bauer of Prosper Trading Academy, thank you so much for joining us for Options Insight here in New York. Caroline and Scarlett, back to you.
Abigail.